You are listening to chartingwealth.com for Thursday, the 9th of July, 2015. We are seeing some strong down moves in the total market. This is IYY, where we always start. It is a representation of the movement in all the stocks in the stock market. This is an ETF that is a total market index fund, and you can see what has been happening. Those of you who are listening by audio, the market reached its peak back on the 23rd, and that is of June, and then it rolled over and has started moving down strongly since then. We have a 2-day trend line that we've connected 3 candles on. The latest candle, the candle on the 7th, and the candle on the 1st. And we have continued down movement over the last many days. Now, what we see happening is today the market was down 1.62%. If we drop back to the 4-hour chart, take a look at that, we see the market moving substantially down starting around the 24th on the 4-hour chart, and it has continued to move down, tried to bump up on the MACD for the 4-hour chart, did not cross over, and then moved back over the last day. We had a candlestick showing a good deal. It's not quite a doji. You can look that up if you don't know what a doji is. It means a lot of indecision. That is on the 7th in the afternoon. It was the ending candle. And then, of course, the market opened on the 8th and continued to move down. All the movement is well below the 2-day trend line. Now let's go back though and look at the 2-day chart once more. You can see that we have had a crossover going down way back on May the 28th and June the 1st. Right in there is where the crossover going down started to bump up around a Fed meeting around the 19th, 23rd or so, and then has rolled, never did cross over fully, and has continued to move down substantially with things going on in Greece and China. Now let's go to the SPY. What is that? Well, that is the Standard & Poor's 500. It is again another index that tracks all of those stocks, those big stocks in the S&P Standard & Poor's 500. We see the big market very much duplicated, although again, this is 500, not the whole market. We can see where we had a crossover between the 28th and the 1st, that's 28th of May and the 1st of June, and a continued down movement, a bump up around the time of the Fed meeting and the decisions that were made there. And then we see the market rolling over starting about on the 25th and continuing to power down. We have 3 good candles connected, and the market is well below the 2-day trend line. If we drop back to the 4-hour chart, we can see something similar to IYY, the total market. We did have a stronger bump up on the 4-hour chart the afternoon of the 7th, but again, it didn't approach the 2-day trend line. We're still well below that and then rolled over this morning. Don't be fooled by movement on the short chart. You want to see that mimicked on the larger chart, and particularly pushing through at least your 2-day trend line. Now, let's go ahead and go back to our 2-day chart and move on to my favorite chart, which is the Qs. And the Qs is also in a strong down move. It crossed over a little later, going down between the 3rd and the 5th of June, and bumped up a little bit around the 25th, never crossed over, has continued in a strong down movement, and we had it even accelerate further today. The derivative oscillator got larger, and the difference between the MACD and the signal line got larger, so the market is a strong down move. What is interesting is you can see the candlesticks over the last 4 days have bumped up around 105.88. That is where they stopped in their down movement. We'll continue to watch, just sort of keep an eye on that. Might give you a floor, might, maybe not, but just be aware of it. And again, we have a 2-day trend line that's drawn, connecting 3 candles. We always like to see at least 3 candles to give us some structure and some strength that we should expect with that 2-day trend line. We shall see. So when it is crossed, it gives us a much better move, much better feeling that the move has changed and there's a move up. But you can see nothing like that is happening over the last many days. We had the 4-hour chart move over between the 25th and the 26th of May. of June continue to push all the way down through the month of July, and we are still in a downtrend well below the 2-day trend line. Now we'll go back to the two-day chart for one last chart, and that will be gold. Gold was up 0.3%. That's not 3%. That's 1/3 of 1%, not even that. So what do we see, however, with gold? We see multiple candles on a 2-day trend line, even today's candle. We had gold crossover going down on the 2-day trend line between the 19th and the 23rd. It's had a couple of green candles, actually green candle today, but again, still well within the bounds under the 2-day trend line where we have 1, 2, 3, 4, 5 different candles connected. Watch again for that to be pierced. It might give you some idea that gold is turning around. However, the derivative oscillator heated up today, and the signal line and the MACD are diverging even more. So the 2-day trend line is not telling us that gold has turned around at all. Let's look at the 4-hour chart. It crossed over going down on the 22nd, and we have seen that continue to move down as it sort of slid sideways for a while, but it's continued to power down. Ended the day with a down candle for the afternoon, up a little for the day. Overall, we are below the 2-day trend line on the 4-hour chart. Derivative oscillator lost a little bit of its speed, and it appears that the MACD came together a little bit, but again, remember, this is our 4-hour chart. This is not the big 2-day chart. And we can see with the Bollinger Bands coming together more, the volatility on gold has reduced some. So continue to watch things, everything in confirmed down moves still. All of our charts, the IYY, the total market, the SPY, the S&P 500, the Qs, the NASDAQ 100, and gold. Thanks so much for listening. We love to hear from you. Follow us on Facebook and Twitter. If you haven't gone to our website, chartingwealth.com, please go there and sign up for our newsletter. You'll get our daily reviews every day along with our weekly review on Monday. Usually pump that out Sunday evening. Thanks so much. God bless. Wish you the best in the markets from chartingwealth.com.